In the second quarter of this year, Tesla made $16.9 billion in revenue in spite of the lockdown and inflation issues. According to financial analyst Gerber, the quarter shows Tesla's potential to boost output even in the midst of a slowdown. Long-term Tesla bulls think that Tesla is among the most opportunity-rich firms in the world, in addition to being the most interesting and innovative. With a 12% allocation to Tesla, he called the company the king in his own words. Welcome back to Everything Tesla stock, everyone. Currently holding the largest profit margin in the whole automobile business, Tesla is in a strong position. In 2021, the automaker brought in $53.8 billion in sales and $6.5 billion in operating profit. This is significantly higher than the figures reported by Ford and Rivian, two of its main industry rivals. Gerber, CEO of Gerber Kawasaki Wealth and Investment Manager, feels that Tesla is in a significantly better position than any other electric car company to take advantage of a number of opportunities that are accessible to it. This is especially true given that the carmaker qualifies for these market opportunities and probably more due to its even bigger profit margin. Why, therefore, does Gerber believe that Tesla is invincible in the electric vehicle market, and how optimistic is this investor in Tesla stock? We will discuss this topic in further detail in this video. To be informed about all that Tesla is up to, remember to like, subscribe, and enable notifications before we get started. Gerber recently stated in a video that he is now more optimistic than ever about Tesla and that he is experiencing greater epiphanies regarding the automaker. He ascribed this to a number of things, including Tesla's leadership in climate change-related investments, which he thinks might boost the automaker's profit margin and cut production costs. One of the key initiatives that might propel Tesla's expansion, according to Gerber, was the company's decision to begin increasing battery production in the United States in response to the recently passed Inflation Reduction Act. Tesla intends to relocate the battery section of its Gigafactory from Berlin to the United States. This follows the announcement by the U.S. government of a $7,500 tax credit for electric vehicles, subject to the extraction or processing of certain essential battery ingredients within the U.S. Although Tesla can manufacture cars in the nation with the help of its facilities in Fremont and Texas, according to Gerber, the company will have an advantage in obtaining the tax credits that have been disclosed if it builds a battery facility. What does this signify for investors in Tesla? To find out, keep watching. With increased battery production in the U.S., Tesla may use the tax credit to enhance car production while lowering prices. Tesla possesses the greatest ability to cut costs in the business and may continue to do so in the future. Regardless of what happens in a market, as the company continues to release more cars, Tesla's production costs will decrease. Gerber claims that the tax credit has the potential to slash Tesla's cost per vehicle, hence lowering car pricing and increasing corporate profits. With its current huge profit margins, battery subsidies for Tesla may simply be the cherry on top. According to the Inflation Reduction Act, automobiles must get 80% of their essential components from either domestic sources or nations with which the U.S. has free trade agreements by 2026 in order to be eligible for credits. Tesla is already investigating some of these possibilities. The automaker has revealed intentions to invest in the mining of raw materials, including as nickel and lithium, in recent months. If Tesla succeeds in doing this, it will put itself in a better position to receive the tax credit. Additionally, Gerber said that Tesla's supercharging network is a major factor in the company's ability to generate large profit margins, particularly in light of the company's intention to make its charging infrastructure available to non-Tesla customers. The automaker revealed earlier this year that it is developing a new supercharger membership to allow non-owners of Tesla electric vehicles to utilize its network in the U.S. By the end of the year, it is anticipated that Tesla will have opened up the network in North America by releasing a new CCS adapter for owners of non-Tesla electric vehicles. Tesla released two membership tiers on its app, a $0 and 99 cents monthly membership plan and a pay-per-use plan. Even though Tesla quickly took this feature out of the app, the information convinced supporters of the firm that it still intends to grow its network of superchargers. Additionally, Gerber expressed his confidence regarding the U.S. government subsidies for charging stations, saying that while he is unsure if Tesla has benefited from these subsidies, he thinks the automaker will. The Biden administration announced in February of this year that it will allocate about $5 billion over the course of 5 years to construct thousands of EV charging stations. The goal of this was to persuade Americans to stop driving gas-powered vehicles. By 2030, the government intends for 500,000 new EV charging stations to be established and for 50% of all newly sales vehicles to be plug-in hybrid or electric variants. Similarly, the era of energy abundance is predicted, according to new research by Austin Vernon and Ely Dorado. This is a period of time when energy will be so abundant and clean that limiting use will be completely superfluous. If this period of energy superabundance materializes, according to Gerber, Tesla may be able to offer supercharging services at virtually no cost while making huge profits from them. Tesla currently boasts the world's quickest supercharging network, and this will only cause it to expand. According to Gerber, the network might truly be valued at $20 billion, $30 billion, or even higher. However, the true value of Tesla's supercharging network is also not completely estimated. However, a number of stock experts are starting to take this into account when assessing Tesla. Given that Tesla has already established itself as the industry leader in the supercharger network, it is reasonable to assume that other EV manufacturers will eventually collaborate with Tesla to offer supercharging services for their electric vehicles, just as they will probably make use of Tesla's autonomous software in the future. When Tesla opens up this facility to non-Tesla EV owners, it will eventually become the only rated supercharging network, enabling road trippers to travel farther and more conveniently while charging their vehicles. This will not only help Tesla achieve its aim of using cleaner energy, but it will also raise the company's valuation considerably. During his presentation on the Cybertruck, Ross Gerber predicted that a large number of people would embrace this innovation, adding that the Cybertruck will eventually overtake the Ford and Rivian truck models, despite the fact that they have released theirs before Tesla. He said, "I've become widespread in love with Cybertrucks, and I am now fully convinced that electric vehicles will be adopted by truck drivers, and they love electric vehicles too." Although most people didn't fully embrace the technology when the Cybertruck was first introduced, things do appear to be changing. According to Gerber, the truck industry will be the next big thing. The Cybertruck, which should make its debut early next year, will be a significant milestone in Tesla's new trucking venture, which will also include the semi-truck. There are multiple grounds for accepting this. Due to its 4680 battery cells, the Cybertruck's delivery timeline has slowed down, which could be one of those significant issues. When Tesla first revealed them in 2020, they claimed to have made it possible to produce more affordable and long-range electric vehicles. It was anticipated that these cells would power every electric vehicle in the future, including the Cybertruck. Prior to the massive manufacturing companies starting to mass produce the new battery, Panasonic provided Tesla with 4680 battery cell samples, as the company had previously indicated. It appears that production has begun, albeit on a very small scale. Speaking of these battery cells, Gerber stated that work will begin on them and that the results will revolutionize the Tesla industry. Gerber has expressed hope regarding the 4680 battery cells previously. According to an investing expert, Tesla's 4680 cell project is the most significant advancement in battery technology the company has made in a long time. He added that Tesla can produce EVs that are 7 times more efficient than conventional cars with the use of this kind of battery cell. This Tesla bull thinks that various additional breakthroughs, in addition to the company's expenses, contribute to the stock value of Tesla and determine its worth. It is reasonable to argue that Tesla may remember lower sales and profit margins, even though other electric car businesses are still entering the market. However, this could be challenging because these EV companies do not have the same cost advantages as Tesla. It will take a lot more to surpass Tesla, as the company is currently present in practically every significant aspect of the switch to sustainable energy. Gerber asserts that there are dangers and a chance for things to go wrong. It's these risks that give Tesla such superior performance.